Hi, Sean with the Ag Center. Give me a weekly update on crops here in the valley. What's going on? Almond prices staying pretty consistent. 245 for nonpareils, 235 for independents, 225 for Californias on average. In-shell prices up about 262 on continuing demand in that area. Export volumes are up a little bit, despite the fact that China and India are down because the Middle East and Europe are taking those on. India may give us a little bit more relief as they head into the wedding season, which is typically a buying period for them. And we'll have to see if that kind of helps alleviate the fact that we're down with that country this year. But overall, price demand and supply seem to be imbalanced, and the price looks to be continuing. Bees are getting dropped in the South Valley right now. They'll continue to drop up as we hit bloom full here in February. Bee prices at about a 185 to 210 this year per hive. Availability and strength of the bees looks pretty good. I think going into this year, the 2025 crop, it's going to be helped up by the fact that the final crop is about 2.75 billion pounds on 24, which means less carry-in to kind of push down the 25 crop. Tomatoes looking like they're going to cut contracts back by 20% this year, despite the fact that we've had a lackluster growing year. About average tons in California about 48 tons per acre, but China overproduced about 30% more than prior year, which is really flooding the market with about 1.5 million tons more tomatoes than we had prior year. Hopefully this cutback in acreage just kind of get us back into balance again. It's also going to help support the price that we get from the CTGA. CTGA is having their meeting in February on the 12th. They'll be talking about what prices are going to be. It looks like they're going to be about 110 to 115 per ton this year, which is a good profitable range for most growers. On interest rates, rates continue to inch up due to the fact that the FOMC decided to cut the amount of rate cuts they're doing this year. I think when you got continuing pressure from low unemployment, increasing jobs, and the third month-over-month increase in inflation, it's going to be really hard for them to continue to have a lot of cuts for 25, and may even pressure them to have a fewer cuts for 25, which could cause rates to go up. We'll watch that more as we get news. That meeting's for the 29th of January. Once we have it, we'll kind of comment on it. That's what I've got for Ag News here this week in the Ag Center. Thanks.